to Ethex's Cuppa Club. I'm just going to wait for some people to join us as they come in. I hope you'll appreciate my snazzy background, which I've managed to work out how to do this morning. And I'm joined here by Nick Coydle from Iguana Energy. So welcome, Nick. We'll just
Thanks for the invite.
welcome. Wait for some more people to join us and then we'll kick off. Got quite a few people registered today, so hopefully they'll all be joining us as we speak, and we will start talking momentarily. Good. Okay, so morning everyone again. Lisa Ashford here, CEO of Ethex. I'm joined this morning by Nick Coydle from Iguana Energy.
Good morning, Lisa.
Great to be here, and I have to say I am back in the office for the day, which is marvelous. So after a very long wait, it's great to do a bit of collaboration with my colleagues. So hoping to come out of this COVID nightmare and really get going again on our core business. So today we're going to be talking about Iguana Energy, who's listing on the platform. So it's a get to know the business. So we've got some good questions to ask Nick to understand what he's been doing and what his background is and hopes for the future. And also you can submit questions via our chat function. So please do that. I'll try and feed them into the discussion. Otherwise I can do a quick fire Q&A at the end. Just to say that we can't answer any specific questions on people's personal financial circumstances. And this isn't a financial promotion, it's purely a information gathering exercise for you to understand and get to know Nick and what he's doing at the moment. So let's start off. And Nick, could you just give us an introduction to yourself and how you started Iguana and who else is on the team?
Sure, thank you. Thank you, Lisa. So yeah, I started Iguana Energy, officially start of this year, but it's been in planning, or we've been working with Ethex since May last year. It's obviously taken quite a lot of time and with respects to putting together the portfolio, putting together the background of the actual developer and EPC, which is Harvest Green Developments, as well as putting forward the actual offering. So making sure that the offering is of interest to investors and is in line with actually the project returns for solar in the UK. With respects to myself, so I've been in renewables since 2010. So I set up initially Absolute Investment Partners, which is an advisory group in renewables. We've funded and raised capital for over 1,040 megawatts of renewable energy. That's across solar, wind, anaerobic digestion, biomass, and energy efficiency across pretty much most European markets, so specifically the UK, France, Germany, Italy, those markets. Prior to Absolute Investment Partners, I've been working across, started my career in the financial service sector. So I started in 2002, and then in 2010, that's when I decided to move into renewables. So the motivation to move into renewables was, it's close to my heart. I'm a greenie. I've always been interested and focused on renewables, climate change, and those aspects related to that, and decided, where am I best helping reduce climate change and funding solar and renewable energy transactions. And that's when I decided to start off in the advisory side with a view to become a specialist in that sector. So that's what I did. 2010 set up AIP. We funded lots of different transactions. I think what dawned on me last year was that a number of transactions, the actual transaction, most of the transactions that we've focused on are project finance transactions. So those transactions typically take quite a long time. So the last transaction we closed in December last year took 16 to 18 months from start to finish to raise senior debt finance for large 100 megawatt solar portfolio, where we raised 52 million of debt finance, and that took 16 months from start to finish. So I think, for me, what I wanted to do is focus more on a business where we're creating a business with a view to make it easier for C&I sector, so commercial industrial sector, to reduce their energy consumption, to reduce their price volatility with respect to prices generally, where they're buying electricity from the grid, and to have an impact. So making sure that these sectors, which are typically they use or consume huge amounts of electricity, is how can you reduce their consumption? How can you start making them greener? And that's what I want to do with Iguana Energy. Typically, if you look at UK solar projects, so the UK solar projects will have a typical return of around 7%, and it's the cost of capital which is the key for making this transaction work for investors and for the C&I sector, who are looking to have a fully funded solution. So Harvest Green Developments came to us. They were getting very frustrated with respect to how these projects were typically funded. And if you think of the size, a lot of these projects are smaller in size. So they can be a 30 kilowatt, a 15 kilowatt, a 500 kilowatt site, or a megawatt in size. And a lot of the investors, specifically also the lenders, don't want to invest into one project. So they want a portfolio of projects, and it's hard to put all of that together. So, who are the lenders, banks that would provide a 30 kilowatt site? There aren't many investors apart from asset finance lenders for that way of funding. So for me, that's where I decided, the best is, when I started working with Ethex, is to find an innovative finance solution for funding these projects. And that's where we signed basically a collaboration agreement with Harvest Green Developments. They have built over 6 megawatts of sites today. They provide O&M for about 5 megawatts of sites across the sector. So they typically provide, and they are a developer and a builder of solar. And they were also a small company at the start. So they started, and the CEO, Sam Brown of Harvest Green Developments, was looking for funding solutions. And we initially started to look to see if it worked with project finance, and a lot of the conversations with those project finance lenders were very difficult, and it came with lots of caveats with respect to size and credit rating of all the underlying clients. So that's when we decided what is the best cost of capital that is of interest to investors, and then kind of marry the two with respect to how we can actually put this transaction together.
That's great. And so when we started talking, I think it's fair to say that we said, well, do you have a track record? And because this was a new startup, you were just starting to get going. But since, because it's taken us quite some time to develop this solution, in the meantime, you have managed to already implement some projects. So perhaps you could tell us about the projects that you've already started work on. Yeah.
So the projects that we've already started on with Harvest Green Development, so they basically decided to have, the initial projects are Esher Rugby Club. So that was a project that was built. And that size, I'm just going back to the size, was I think 49 kilowatts. The second site was Elite Aluminium Systems, which is 32 kilowatts. And those sites have been built. So those sites have actually been built and installed by Harvest Green Developments, who was the developer of the site. So they actually went out to go to the off-takers and pitched the idea of reducing their energy consumption, negotiated the PPA for those clients, and they've built those sites. So those are built, and we've basically funded those transactions. So same with Right Now. That is I think during the process of preparing the IM that was still being built, that is now built, and so that's a project that we're looking to acquire as well. So same with the actual immediate pipeline. So if you look at the immediate pipeline, we have an immediate pipeline of about 4.8 megawatts. The actual pipeline of Harvest Green Developments at the moment is over 20 megawatts. We also have 20 megawatts of our own portfolio that we're looking to put forward to Harvest Green Developments, where they can then go out and negotiate with the off-takers and develop those actual projects, so we can then start building on those projects. So I think there's more than enough demand from off-takers that are looking to reduce their electricity spend. As you can see from the IM, the immediate pipeline, we're looking to reduce the consumption of these off-takers between 11 to 40%, so on average about 28%. And yeah, we'll continue to do that. So this immediate pipeline, in terms of when those projects will become ready to build, that will, that's why we've put, quarter, Q2, Q3, Q4, just because we don't know exactly when those projects will be ready to build, but they'll all be built within this year.
Okay, so the structure of the financing, from what I gather, is such that the commercial entity is not having to pay up front. And so that obviously makes it a much more attractive solution, and you're much more likely to be able to convert a number of these commercial and industrial customers to integrating a renewable solution into their production facility or whatever it is, effectively. So in terms of the, resistance or the attractiveness of the offer as such to these clients, how has it been viewed generally?
It's generally been viewed very positively. We've found a lot of the companies do not want to fund these transactions themselves. So the most important thing is they don't want to fund a solar installation, providing, let's say, EV stations where they can charge their cars, because they don't want to have it on their balance sheet. So if you look at a company itself, the company, they specialize in a sector. So if you look at, Esher Rugby Club, for example, they're a rugby club. They're not looking to put, they don't have the track record or the experience to know what is the best solar panels to put on the roof. Same with Elite aluminium systems. They focus on providing prefabricated aluminium systems, which is, those companies want to focus on what they know best. And we know solar. I have 10 years of background of solar energy, as well as the actual directors of Iguana Energy. So, Jamie McDonald-Murray is a big developer in solar, has lots of track record in developing solar energy projects. Same with Kofi, he has lots of track record in developing and funding solar transactions. So the main benefit, and what we're looking to do, is basically provide a fully funded solution and ensure that we're reducing the consumption of off-takers. So we want to make sure it's an off-balance sheet item, because typically these companies do not want to have a solar installation on balance sheet. Okay,
interesting. And in terms of all of these projects that we're talking about today, they're all in the UK. And is there anything specific in terms of the geography? Are there any particular areas where Harvest Green focuses, or is it completely UK-wide?
I'd say UK-wide generally, if you look at their portfolio, but Southwest, they're based in the Southwest. So a lot of the projects you'll see that will look to fund are in the Southwest. Obviously, the irradiation in the South, in the South generally is far greater than the North. So we prefer to focus on projects below the M5.
Okay. So this is an interesting question. So can you say something about your relationship positioning compared with other community energy companies? Are you competing with them? And are you not delivering any community financial contribution? I think it's fair to say that this is a slightly different model, focusing purely on commercial and industrial projects, rather than solar projects that are at the heart of a community, for example, although some of the community energy companies do have some commercial rooftop solar within their portfolios. But I think it's fair to say that because your focus is particularly on this commercial and industrial sector, you are a slightly different being to a standard community energy company.
Mm-hmm. Yeah, so I think I've worked on community energy projects before, and they all, as similar with project finance, they take a long time to actually put together. So you need the councils, you need a lot of the community, within the surrounding area to have approval, and structuring a transaction like that is very difficult. I think what we wanted to focus, as you mentioned, is on the commercial industrial sector, where they have high energy spend, and we're looking to reduce their energy consumption. So we're not looking at, it's not to say that we cannot look at community energy projects. I think, we can definitely look at those projects and see how we can get more involved with respect to the community. But it is specifically to focus on big companies that are, typically are, I wouldn't say as efficient, and don't focus on climate change, and that's not on their radar typically. So we want to focus on initially taking a first step to reducing, to basically provide a way of reducing their carbon impact on the environment.
Yeah, I mean, I would say that it's an interesting perspective to think, well, are you competing with community energy? But I think that, given the net zero targets that we have, and the incredible acceleration required to implement more carbon saving energy solutions, that actually, even if all of the organizations currently operating in the market were running full speed, we still will struggle to get to net zero. So from my perspective, I would say, I think you'll probably agree, that there's a big enough market and big enough scope for lots of different entities to be playing side by side.
Yeah, would totally agree. I think there are lots of other companies that focus specifically, let's say, focus on the community, focus on providing solar for schools. We've been involved, as mentioned, in a number of those where clients were looking to focus on those specific sectors. But I think there is a place for lots of different companies, and our focus at the moment is within the commercial industrial sector.
Yeah. Okay. So. Good question. Is there within the plan the intention to try, and you've mentioned it a couple of times, to reduce the energy consumption of the organization, as well as providing a cleaner energy solution as well?
Yeah, I mean, in terms of a strategy for Iguana Energy, I think we need to kind of work step by step. So I think solar is a simple solution that we can provide for clients that are looking to reduce their energy spend. It is the lowest in terms of cost of capital. It is the lowest form of generation. So it's lower than most carbon intensive forms of generation. We can look at other streams with respect to reducing the energy consumption, but I think we wanted to provide an investor a simple solution where the opportunity is solar, and we didn't want to complicate it with anything else. So we didn't want to provide batteries. We didn't want to look at any other forms, let's say combined heat and power. We wanted to keep it as simple as possible so investors could understand the investment proposition. So solar has been, it's been funded, and the gigawatts of solar that have been built all over the world. It is not hard to understand. You can, pretty much, the income stream is very predictable. And I think if you look at, the UK government, a lot, in order to stimulate the sector, what they provided were feed-in tariffs and renewable obligation certificates. And I was looking forward to the time when there were no renewable obligation certificates or feed-in tariffs, because I don't think we need them. But that was used to stimulate the sector. And definitely solar, generally, we can provide a sensible return for investors, and we can provide an investment proposition that is understood by many investors, that are on this call today, but also for investors that don't understand solar, have never invested in a solar product before. So I think it's, we're trying to keep it simple, but in terms of the strategy going forward, we would love to focus on reducing the energy consumption of off-takers far greater than 40%. If we can reduce them by 50%, fantastic. But as solar, everyone knows with solar, you can actually only, you can only produce and generate electricity when the sun is shining. So, then the drawbacks of solar is you can't provide 24/7 energy, but that's part of the actual technology that we're using. So
on that, actually, are there any of the installations where there's going to be battery kit as well as the solar kit?
For the investment proposition that we've offered investors today, no. So we don't want to provide more complexity. So with batteries, you can only provide, depending on the actual size of the batteries, you can only realistically provide energy from batteries between 2 to 4 hours. So you can extend the electricity that you provide the off-taker with 2 to 4 more hours of energy, but it's not something that we're looking at today. Yes, potentially, next year or the year after, but it's not something that we're looking today. Okay. There have been, so Esher Rugby Club as an example, they are looking to at EV stations, so they're looking for a way to charge electric vehicles, and then that's something that we're discussing with them, but it's not part of the Iguana Energy proposition today.
Yeah. Okay. Thanks, Nick. There's a question around ownership, and so 2 questions in relation to that. One, who is doing the operation and maintenance of the solar installations? And then secondly, who owns the kit in the long term? Does it actually then get sold to the businesses, or is it on lease to them effectively? Okay.
So the operation maintenance will be done by Harvest Green Developments. So I think if you actually look in our in the financial model, we're accounting for an O&M fee per year, but for the first 2 years, we're not actually we won't have to pay for the operational maintenance. So Harvest Green Developments will actually ensure that the performance of those, the installations are performing the way they should be. So as mentioned, Harvest Green Developments have provided O&M for about 5 megawatts of sites in the UK today. And that portfolio is expanding day by day. With respect to what happens to the kit afterwards, our preference is to, after our PPAs are typically 20 to 25 years. You'll see, for the immediate portfolio, it's 25 years. The useful life of the asset is 30 years for solar modules, and the inverters typically have to be replaced between 8 to 10 years, unless you take a warranty that covers the inverters, which we're looking at the moment. But we intend to leave the kit with the installation once it's been installed, so they can continue to receive electricity from the installation post the fixed period of PPA that we agree with the client. So we're looking to, in our financial model, we're modeling the period of the revenue that we expect for 25 years. And beyond that the asset will then transfer to the actual landlord or tenant.
Yeah. Okay. Understood. Just sort of on that note, why do the occupiers, why do they not want the asset on the balance sheet, the solar asset?
Because it's not core business. So
right.
That is primarily the reason. So it is not their core business. They don't, and a lot of, with respect to a lot of companies, as mentioned, they don't understand, basically what's involved in a solar asset. So some might not, but it's typically clients just don't want to have it on their balance sheet.
Yeah. Okay. Understood. And as you know, a lot of our investors are very discerning when it comes to the types of projects that they support. And in terms of the portfolio, and I know we've had a discussion about this previously, in terms of the portfolio, how do you choose the organizations that you're going to be working with? And is there anything which is off limits? Because I'm sure our ethical investors will want to know, what they're ultimately investing into.
Mm-hmm. Very good question. So we've actually had, a few questions exactly like that from investors, which, I really like to see. So they've asked specifically about, Chinese modules. So do you use Chinese modules or module manufacturers that have been involved with, forced labor? So with Uyghurs in China. And we've responded and said, no, our solar modules are Hanwha Q cells. So, they're South Korean, and, they've signed a pledge that, they will not use anything in terms of where they source their silicon, that they will not be involved in any form of forced labor. So we look at where we source our equipment, and we discuss that with obviously Harvest Green Developments, who's the developer and builder of these projects. And if we find that a company has a policy that is unethical, or is something that the investors of Ethex as well as ourselves do not agree with, we would stop using that manufacturer straight away. But at the moment, we're using Hanwha Q cells for our solar modules.
And how about the other end? So the clients that you're working with who will be having the solar kit installed?
So the clients, we typically look, so there are certain clients that we won't look at. So we won't look at, oil and gas companies, for example. So companies that are involved in oil and gas, defense, we won't look at. So there are a lot of clients. We will look at companies if, we also want to make sure that we're funding and putting solar on installations, which we agree with, and, are ethical. So we look at, factories which, are ethical and are looking to reduce their consumption of electricity. So fruit and vegetable companies, for example, companies that use a lot of energy for the production and manufacturing of equipment. So for example, steel is another example. But yeah, we tend to look at companies where it fits within the ethos and the policy that we have as a company. So it needs to be ethical. They need to have the desire to move to green, and that's putting solar on the installation is one thing, but with respects to actually reducing their carbon footprint across the whole sector of their manufacturing capability, that's also something that we look at closely.
Okay, perfect. Thank you very much. Something specific. Are there any exemptions when it comes to looking or screening in terms of animal welfare? That is something that's important to one of our clients.
We wouldn't look at any, so in terms of if we found a company wasn't looking after the animal welfare, we wouldn't be looking at funding and putting solar on their factory or installation.
Okay,
project.
thank you. Good. I think that's given us a really good set of questions, actually. As you can see, that there's quite a lot of interest in this. So another question, how is the 7% typical return arrived at, depreciating asset versus sinking fund? Does that make sense to you as a question?
I'll just look at it. How is a 7% typical return arrived at depreciating asset and sinking fund? So yeah, I mean, typically, so solar assets have if you look at large scale solar as well as roof solar, a lot of the returns for projects will be around 7 to 8%. Dependent on the actual cost of the installation. So we expect that the cost of the installation, every year will reduce because modules are, are cheaper. So they year on year are reducing. So if you look at solar, a long time ago, it would typically cost $76 or dollar watts. Today it's 46, between 46 to 52 pence. Per watt peak. That's excluding the actual margin for actually installing on the side. So our model is for our offtake portfolio, the PPA is between 8 to 14 pence. The PPA duration is for 25 years. The the income is CPI linked. So we're typically modeling between 2.5 to 3.5% for linked to RPI. And yeah, the interest, as we know, to bondholders is 5.5%, and it's for a minimum of 3 years to 5 years. So that's what we've modeled. We expect the numbers to increase. So after the 5 years, after the bondholders are repaid, what we'll be looking to do is refinance the whole portfolio, and that's a whole purpose of starting off with small installations, and then once the portfolio gets to size, we'll be able to bring in senior lenders that will fund a whole portfolio of the assets. So we will look to reduce the actual cost of senior debt. In terms of depreciation, the asset is depreciating. So we're modeling for that in our model. So we're modeling a 0.006 degradation factor. And what was the other point? Sinking fund. I didn't really understand what Robin mentioned in terms of sinking fund.
I think that's probably just another way of looking at the sort of depreciating asset. So another question, thank you. Paul, do you pay all your staff at least the living wage, and what about Harvest Green?
Yeah, so Harvest Green developments, they pay their own salaries. So the framework agreement that we have with Harvest Green developments is they develop and build the project, and they're obviously responsible for their own salaries. So I'm sure they pay their staff the right living wage. We pay all our staff more than above the living wage. So that's, yeah.
Good. I mean, I suppose there's a more general question in terms of screening your preferred developer when you were looking at forming a collaboration. To what extent did you scrutinize and get under the hood of Harvest Green?
So as mentioned, Harvest Green Developments, they're a new company that was set up in 2018. So initially, they're not, they have 6 megawatts of installed capacity. So it's not a huge amount, but it's not, it's still in terms of, for the C&I sector, it is big. And so we looked, we discussed with Harvest Green Developments initially. What we liked is in terms of, we saw they were a good fit to our company. So they weren't looking to just provide a fixed reduction of energy for the consumers. They were looking to reduce as much of electricity as they could. So the PPA ranges are different, but a lot of the price of electricity are also very different. So as mentioned, we're looking to reduce the consumption of electricity between 11 to 40%. And yeah, we looked at their track record. We looked at their track record of developing and building. We looked at their portfolio. We looked at the underlying clients, which are the off-takers, and also the credit rating of the actual off-takers as well. So what we don't want to do, and a lot of the questions came up when we were raising project finance, is if an off-taker goes bankrupt, for example, what is the worst case scenario? The worst case scenario on our side is that we effectively, we give the off-taker a period of time to actually pay the income that they are required under the purchase power agreement for electricity. But the worst case is we would then find a different off-taker that we can then basically use the same equipment that we have. We would find a similar site and then reinstall that site on a different off-taker. So that is, in terms of risks, risks for the business, that is our primary risk. But what we were looking at, to do is, instead of having a big installation, you have one off-taker and the off-taker is taking all the energy. We're looking at a diversified portfolio, so we have a hopefully diversified risk, and the credit rating of individuals, of off-takers, we look at very closely. So to ensure that it's a company that's been established, and it's a company that we expect to be around for the next 10, 20 years. Obviously, there will be instances when companies need to move. So if we have to move the installation, if it makes sense, we will. In the actual agreements that we have with the off-takers, so the tenant or the landlord, we're able to do that, and we ensure that we're covered with respect to the income for bondholders. So they will either have to pay for the insulation to be decommissioned, reinstalled somewhere, or they'll have to pay for the insulation upfront, so that the full cost of the insulation.
Right. Okay, great. And that's you that is doing the credit screening on the company, is that right?
Yeah.
Yeah. Okay. So that's also the sort of neat relationship between yourselves and Harvest Green. So you're sort of like bringing that extra rigor to the collaboration.
Yeah, I think Harvest Green Developments, they will go out and they'll find different off-takers. So obviously, when you're trying to establish a potential lead, so someone that is looking for solar on their roof, so they will have lots of inflow in terms of people inquiring and looking for looking for a fully funded solution. So Harvest Green Developments will initially look at the company. They will look at their accounts, they will look at the credit rating, but then we will then look at it from a production perspective, a credit rating perspective. So in terms of production of energy, so in terms of ensuring that the yield of the solar installation is high enough to service the cash flows that we need to ensure that we're paying back for bondholders. Same with respects to the default risk, so the risk of default from an off-taker, ensuring that they're credible, that they've filed accounts and that their credit rating is that there are no legal challenges, or there's no recourse or pledge to the actual company. So we're looking at companies that are not highly leveraged. So we don't want to focus on companies, off-takers, that have huge amounts of debt and are not profitable, so it can't actually service.
Makes sense. Good. Okay. Is there anything else, Nick, that you had quite a grilling now? Is there anything else that you'd like to say before we close, or anything that you haven't been asked that you thought you would be asked?
I think in terms of, I go back to a lot of companies kind of say, are you net zero, or solar, is solar net zero? And we do have kind of people who say, well, solar, the production of modules is not in net zero. So I think, we focus, there are obviously companies, off-takers, our clients that are looking for energy. They're currently using their energy and burning, using energy that was derived from coal, gas, typically. And what we're looking to do is, yes, I agree with some people saying that the production of modules is not zero, but once it's installed, it is net zero. So I think we are focused on a sector which is it is the cheapest form of energy, it's the greenest form of energy, people understand it, and we can scale the company up from, let's say, installing a 30 kilowatts to a very large installation, and scale a company in a huge way. So we have aspirations of providing a fully funded solution for a lot of companies. The initial target for the portfolio is shy of 5 megawatts. We're looking to expand the company and to have at least 20 megawatts over the next kind of 3 years, and we're looking to expand that company. So if the investors on this call are looking for other ways that we can reduce the consumption of energy for off-takers, we're happy to look at that. So we're happy to modify the strategy if they're looking if they understand that we can add complexity to reducing the energy consumption of off-takers far higher than 40%. Happy to look at that at a later stage. But as mentioned, our focus is to keep this, the actual transaction very simple for people to understand, and for also to provide Harvest Green Developments with a simple solution to communicate to their clients, the off-takers, so they understand, the lease and PPA, and it doesn't have huge amount of clauses where they just go, look, I don't understand this, it's in turn, they don't understand the transaction. So as mentioned, we're trying to keep it as simple as possible for the moment, but we can add complexity at a later date.
Mm-hmm. And just one last question. Mm-hmm. In terms of competition in the market for the solution that you're providing with Harvest Green, how is the outlook?
I mean, there is competition. I think you'll find, that there's a company that is funded by Next Energy. So that's one of the main companies that we look at. There is There are new businesses being set up by other energy companies, but we don't see a huge amount of focus in this space. So there are a lot of installers, and I think what we found is because the UK government put really put very attractive feed-in tariffs and renewable obligation certificates, so effectively the revenue that is guaranteed by the government, you had a lot of people that started specializing and starting in the sector, but then that was all taken away. So you have a lot of qualified installers and people that want to be in this space. So I do think that in terms of competition, a lot of people will want to produce, basically provide these services. But I do find that at the moment, we don't think we have lots of competition. The main reason why is in terms of cost of capital. That is the most important thing for this actual transaction to work. So it needs to make, if our cost of capital from senior lenders was too high, we wouldn't be able to offer the PPA rates that we're offering to commercial industrial clients today. We're looking to obviously reduce that further with the companies and the clients that we're discussing with, but it all comes down to cost of capital. So that's where we try to align what is an attractive investment for bondholders, which is 5.5%, and align that with the actual offering to off-takers that are looking to reduce their consumption of electricity.
Yeah, great. Well, thanks, Nick. I'm going to wrap it up there because yes, we could carry on talking all day. I think there's maybe one more question that's come up. We can always respond to that post-event. So thanks to everyone who's actually dialed in today. This will be available for listening back if you didn't get a chance to log on today, and we'll provide a follow-up email as well. So thanks very much, Nick. Really appreciate your time today. And thanks everyone for listening. We'll see you again at the next Cuppa Club. Thanks then.
Thank you very much. Thanks,
Bye.
Lisa. Bye-bye.